What's up guys, Globerex here, and in this video I'm going to be analyzing my chart on a trade I took on Solana January 1st, which was literally my first trade of the year. It eventually hit my stop loss, but we are going to be reviewing why I took the trade and what went wrong, and we'll just take a look at it. So for those of you who don't know, I do not trade Forex, I trade crypto only. So this is a 3 minutes time frame on Solana. 3 minutes time frame. So looking at this, we can see that the whole momentum lately has been strongly bearish, with BTC ranging around that 93, 94, 95k thereabouts. So looking at this, the whole momentum has been bearish, down, 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 forming a lot of supply zones, right? And if you're wondering the indicators I use literally two indicators, just two indicators on my chart. I use SD Boring Explosive by Nephew Sam. What this does is the SD stands for supply and demand, because I'm a supply and demand trader. I trade supply and demands. So it helps me mark out every supply and demand zone on my chart. While the BOS and COCH, is it CHOCH, which is break of structure and change of character. Just like it says, it helps me mark out every break of structure on my chart and change of character. Though I disable the change of character because I don't really need it. I just need the break of structure. So keeping your charts simple is the best thing. You don't want to be having so many indicators on your chart that literally blocks you from seeing um, the main picture, because it's not really about the indicators. The indicators are like guides, but it's you yourself. Okay. So now, like I said, the whole momentum has been bearish, and we had supply zone here, a strong supply zone here, which broke structure, then still broke structure again, and kept going down, 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 down. This was on Tuesday. Then we had a push up, okay, into this supply zone here. It tapped this supply zone and then pushed down, broke structure, kind of consolidated a bit, and then down. Okay, now we had a little bit of consolidation again here, and then it pushed down. Now formed a demand zone here. I'm still going to zoom in, but I just want everybody to see the clearer picture. Sometimes you need to zoom out to see everything before zooming in. So then we had a demand zone here that pushed up, broke structure, consolidated a bit, formed a supply zone here, with a fair value gap, broke structure, and was pushing downwards again. Now, my strategy is simple. I'm literally looking for aggressive buys. If I'm trading a long, I'm looking for aggressive buys that breaks structure, right? Once it breaks structure, I'll look at it and say, okay, was the buy aggressive? Yes. Was there a fair value gap at the beginning of the move? Yes. If there was, then I'm looking forward to longing the market from there. And the same thing for shorts. If the sell is strongly downwards, there's a serious bearish momentum, and at the beginning of that move there is a kind of uh, fair value gap at the beginning of the move, and it also breaks structure. Those are the things I look forward to. Then I say, okay, this supply or demand zone is literally valid for me to take. So now zooming into this, let's have a clearer view of it. Zooming into this, there was a demand zone here, right? Push upwards, broke structure, and then came here, formed a supply zone, right? Formed a supply zone right here. And at the beginning of the supply zone, you can see there was a fair value gap at the beginning of the move, right? Formed a fair value gap and then tried to retrace back up, broke structure, and then there was a strong push downwards. So upon me seeing this, okay, we had a clean supply zone here, which had a fair value gap at the beginning of the move and was strongly pushing down. I mean, you can literally see that the push is very, very, very strong, and it broke structure. So that literally validates my those are the confluences I'm looking for, you know, in order to take a trade. And looking also that the previous movement has been bearish, like I showed. So I literally set my entry at the opposite candle, right? This is how I do it, so you see it clearly. The opposite candle of the supply zone, which is literally here. I set my entry here. My stop loss, some people put their stop loss, little bit close, but I do not like to take a very tight stop loss because we all know the market retraces sometimes and you need to give it gap for you to be able to enjoy the move. If you're having a very tiny stop loss, most of the time you get stopped out often, and the trade might eventually play out the way you want it to go, but you get stopped out often. So you don't really want that to be happening to you, right? So I use a wide kind of stop loss, right? So not really too wide, but at the same time, if you look at it from uh, the outside picture, you will see that there was a liquidity sweep here. Okay, there was a liquidity sweep here. So I placed my stop loss slightly above that liquidity sweep here. Okay, now let's look further into what happened. And as we can see, the price came down, retested back up, triggered my entry, and immediately started coming down. Okay, I think I need to zoom this in for a clearer picture here. So before that, I trade 1 to 3 risk to reward ratios. Although once I get to 1:2, which was literally around somewhere here, I move my stop loss a little bit into profits, securing myself some profits while I still want to push it down to my full TP. Okay, that is a risk management kind of approach you need to be applying in most of your trades. You don't just allow the market to swing so much. All right, so back to my explanation. There was a supply zone here, a fair value gap at the beginning of the move, and it broke structure. So those were clean setup for me. And as it was going downwards, I placed my entry here, put my stop loss wide enough above the previous liquidity sweep, and targeting a 1 to 3 risk to reward ratio. So price crept back up here, and immediately, due to, you see, the supply zone was literally strong enough. That's why I said they had a fair value gap. So it came back to test this fair value gap, and it was so strong because it broke structure. It had to respect it. Took in my entry, and then immediately pushed downwards. So at this point, the buyers were trying to like hold, like push it up, but now the supply zone was just too strong. We had a huge candlestick and the downward trend that literally broke structure again. At this point, I was very, very happy because I said, okay, yeah, this trade is going exactly the way I want it to go. I knew there was a demand zone here by the left, if you can see. So I knew probably if it touches this place, it might want to reject back up or consolidate to go downward for that again. So, but before getting to that demand zone, my 1 to 2 is already somewhere like here or thereabout. So before it got there, I will have just moved my stop loss a little bit into profit. But the next thing I saw was, pushback at this point, a pushback back into my entry. In cases like this, you don't want to just break even immediately. I know some people will say, you were already down around 1 point. I think this was around 1:1.6 or 1.5, is it 1.7 perhaps, something like that. Some people immediately move their stops to break even, which is fine. But sometimes the market doesn't just go straight into your tip. In fact, most times it doesn't. You need to give it time to breathe in order to, allow it to play to the way you want it to play. So the market retraced back up When it retraced back up, it formed another supply zone at this point. When I saw this, I was happy. I said, okay, since it formed a strong supply zone and then pushed down, which means it was still respecting that it pushed down. So at this point, I left my phone and my system to go check out some stuff. And then when I came back, I saw that it crept up, broke structure. Had it been I was actually in this monitoring this trade at the point, then I would have perhaps closed at this point because I already know since it broke structure now, that is a change, you know, is a change in the trend. So and it hit my stop loss sadly after going into profit like this, which I'm not mad. Okay, I'm not mad. It's a fair trade. Had it been it, moved a little bit here and then into my 1:2, then I could have moved my stop loss a little bit into profit. But since it retraced and then I saw it coming downwards again, all right, so it's fine. But then it broke structure and hit my stop loss. And as you can see, after hitting my stop loss, it came down back again to this region. And at this region, I guess the buyers were just so strong into control that it had to go back up again and then formed a demand zone, which is literally a red flag. Because once you are trying to trade and then the opposite of what you are doing is in between your take profits, then that's a problem. So it formed a demand zone, which means had it been it didn't hit my stop loss and then I went back into profit and I saw this demand zone, then I'll have literally closed that position. It's a red flag for me. But I didn't survive the stop loss, came down, formed the demand zone, which literally broke structure again. And this demand zone, as you can see, had a little bit of fair value gap, broke structure, and boom, it was an aggressive buy, which went up and still eventually hit stop loss. So, what are the lessons to take from this trade? One, not all trade is going to play the way you want it to go, which is absolutely fine. You can't just have wins, wins, wins. There are losses. That is why you need to trade a good risk to reward ratio. So whenever you take a loss, it doesn't really matter because your next win, you know, will cover for the loss and still give you much more profit. Um, that's it. And also the second thing to learn is you need to know when to cut your losses. Okay. That is why using stop losses are very important. You don't some people say okay they trade without stop loss. When it gets to this point they will get out of the trade. The truth is if I hadn't cut my loss here, lost money at this point, I'll keep hoping that when it goes back here like this, you won't really want the mind doesn't want to take a loss. You just want to keep holding on and holding on and holding on. And you realize that you take wider and wider and wider and wider losses, and as you can see it never came back to that point anymore. So yeah, I took this trade and it hit my stop loss, but it went down into profits. I know in the comment section, some people might tell me you should have moved your stops to break even immediately you were down here. But I said I do move it a little bit into profits once I get to 1:2. So it didn't hit 1:2 for me. So I still gave my trade breathing space. And that is the analysis for the trade I took. um, I'll be doing this for all my trades to show full transparency. We have a lot of people talking about things on YouTube, but you don't literally see them take trades or analyze trades. So uh, you start to wonder, is this person really a trader or is just coming here to talk and blab? So that is why I decided to make this video, and I'll be making every videos like this, analyzing all my trades, both the ones that take a loss and the ones that take a win. And I'll see you guys in the next trade. Cheers.